Welcome to the Food Professor Podcast, Season 3, Episode 25. I'm Michael LeBlanc.
And I'm the Food Professor, Sylvain Charlebois.
Well, we are 1 week out, almost exactly, from spending some great hours at the CL Food Innovation Show in Toronto. We've talked a lot about the last episode, so I just wanted to get your 1 week out. You reflect back on the show. What were the highlights for you? And what did you walk away thinking about the state of food innovation here in Canada and around the world?
First of all, when I leave Seattle, I always feel energized after talking to so many entrepreneurs, and obviously we're blessed with the opportunity to meet the best ones, the companies which have won awards. So that was a nice privilege to have. But generally speaking, I don't know about you, Michael, but I felt this year talking to a lot of different folks on the floor. Costs are a big issue. I mean, How do you actually remain competitive with higher costs? And of course, inflation is hitting the market very hard, and we've been talking about this for a very long time. But on the manufacturing side, you can feel the pressure. I mean, they need to, and of course, this morning I saw the headline of Tyson Foods losing money in the last quarter, and it boils down to cost management, really. And so the pressures are real. And when I was at Seattle last week, I just really felt hearing companies talking to us, you can feel that really that pressure is quite overwhelming. And I don't think it's gonna end soon. It's gonna last for a while. So what were your thoughts?
Yeah, very similarly. I mean, we've been hearing that, like right from the very first session. Jake from Midday Squares was talking about how his costs, and he told us about that story on our episode together. But certainly, almost every entrepreneur we talked to, and every food innovator we talked to, large, small, or in between, was saying, "Yeah, listen, our costs are skyrocketing, so we're trying to manage SG&A input costs and trying to get some." We're trying to get some, where do we go leaner? Do we trim down the assortment? It's forcing some pretty big decisions. Can we get that? Can we get cost from our grocers, a delivery partner? So, it really brings to bear everything we talk about on this podcast, which is, food is more expensive for Canadians, and it starts all the way back here at these food innovators. But still, you got great people putting out great innovation, and it was great to meet. Yeah, still. I mean, entrepreneurs
that's when you can actually appreciate the industry's resiliency. Yes, costs are up, but we also need to innovate. We also need to provide new products. And over the summer, we're going to be broadcasting some of those interviews, and some of the new products, new ideas are really just fascinating.
Yeah, we've got literally like a grocery cart load full of
exactly
bonus interviews coming up over the summer while we go on a bit of our hiatus. So look forward to that from both food innovators from Canada, the U.S. We had a great discussion
all over the world.
All over the world. Yeah, I had a great discussion with the folks from Portugal. We together had a great discussion with folks from Austria, which is a real
Sri Lanka. Yep.
Anyway, lots of great content coming up. And for this episode, a very special guest is Vince Sgabellone, top food service analyst for Circana, which is the new company created with the merger of NPD and IRI.
That's right.
Recorded live in our podcasting studio at CL.
Yeah, Vince is someone I've been following for several years. I have a lot of respect for his work, him as a person, as an expert. He knows his stuff. Like, he's been following the food service industry. He's committed to the industry. He understands trends. So I was happy that we were able to sit down with him for a while at Seattle.
Yeah, it's fantastic. So that interview will be coming up a little later in the episode. Let's jump into the news. And you and I were talking off mic about how newsy this is, or how it's certainly impact, and you're starting to feel it. I mean, there's an episode or an article on Canadian lobster fishers getting worried about their business with China. We see, we're kicking diplomats out, they're kicking diplomats out, or spies, we're kicking spies out. Let's talk about your recently published op-ed, Cold War II and Food Geopolitics.
Yeah, so obviously, I think that everyone's concerned, and I was able to meet with some canola growers while I was in Ottawa last week. So I did spend a day in Ottawa in between Seattle meetings, and I was able to I was able to connect with some people who are severely impacted by what's going on
Mm.
with China, and everyone's nervous. Nobody wants to talk about it, but everyone's nervous. It's like the big elephant in the room diplomatically, and I think that everyone is aware of what's going on. The tit for tat politics is something that is highly predictable with China. We've seen that going back to the Huawei incident that was in December of 2018. So
Sure,
it's
sure.
been a while, but since then, I think it's been super complicated. And some experts actually have said that, well, that was the start of the second Cold War, and to a certain extent, I think I actually believe that when you look at what's going on right now on the world, you feel that China wants to dominate the world. It owns a big portion of America's debt. It basically owns Africa now, so it's really spreading its influence around the world. It's been doing that for several years, and President Xi Jinping actually now has a third mandate, an unprecedented third mandate. He's going to outlast many presidents and prime ministers over the next several years. So that nation politically is going to remain stable, while the
Yeah.
West is not going to be stable. So there's lots going on here, and what really concerns me the most is from a data perspective. There's more, I would say, interoperability between nations compared to the last Cold War. In the last Cold War, we thought mainly about weapons
Mm.
and how militarized the conflict was. This time around, you have to add AI and data and cybersecurity and all that stuff. I think the battle is going to be more like that,
Mm.
unless, of course, China has some dirty plans with Taiwan. I actually do think that really, when you think about the weather balloons that we saw earlier this year, China wasn't interested in surveilling America. China was interested in seeing how America reacted to the balloons and
Mm.
how they responded and all that stuff. So there's lots of intel being shared that is actually helping, I think, China overall. And as Canadians, we are trading more and more with China, but we have to
Sure.
think differently about that region. How are we gonna support our economy, and how are we gonna interact with other nations, and most importantly, how are we gonna interact with the Americans? Because I actually said at Seattle that our relationship with the Americans is going to become more complicated and more of a problem over time. So those are my thoughts, generally speaking. Looking at global food security, what do you think? How do you see the
Well,
situation?
I mean, it's a very, very big topic. Most of which, but certainly not all, is outside the scope of this podcast. But I mean, when you look at where do we begin? If you look at Africa, for example, China values stability, and the last place in the world that has stability is some parts of Africa. So that's easier to say than be done. I mean, recently a bunch of Chinese miners were slaughtered in an African nation by some rebels. You've got the Russians involved in there, the Wagner Group providing security. I mean, it is messy, and generally China doesn't like messy; they like control. So as you expand around the world, things get messy. But
from an infrastructure perspective, I mean, China just built a train.
Yeah,
I believe it was in Tanzania, that goes faster than the train between Philadelphia and Boston.
Sure. I mean,
from
the
an
Belt and
infrastructure
Ring.
perspective,
Sure.
they're investing a lot, and they're becoming more influential. And we don't want to admit ourselves the fact that really 85% of the planet has not issued any sanctions on Russia yet.
Sure. Sure.
More than a year after the start of the conflict. And so I know, like in North America, there's a strong consensus against Russia, but that's not how the rest of the world feels. And so we need to really be aware of what's going on around the world. And I think China has a big say in terms of what lies ahead. I think because it's going to be more stable in that region, which is why I think it's important for Ottawa to look at developing new markets, setting up a new office in the Asian Pacific region, which they did a few months ago with no strategy.
Big trip to India, right? India had a huge presence at
India
at
is really a market that can benefit our own agricultural sector in Canada, but we haven't really done anything in India. And so I think then over the next 20 years from now, I think India will likely become a much more influential partner to Canada, especially when it comes to agri-food.
Well, and the population is growing versus declining in China. So anyway,
it's becoming more educated, and language is not an issue. And I mean, I could go on and on and on. There's lots of there's lots of potential.
Yeah, India has always been the big potential, right? It's a bit chaotic there for sure, but listen, it was great to see the Indian agriculture ambassador. I don't exactly know who was here from India, but there was our friend BK Sethi was hosting a huge Indian.
BK, he was everywhere.
BK, he was everywhere.
Yeah.
And we got him on the pod, so I managed to nail him down.
Guys, I ended up going to a special cocktail party, the Ag Export Group. You know, it's all about exports, and BK was there. He was all over that place. Yeah, absolutely.
BK's everywhere. He's a legend in the business, and we got him on the mic, so it's a great interview.
It's great. Yeah.
All right. Well, that's complicated. That's not going to be the last time we're talking about it. I guess my concluding comments was, you know, at least when you're doing business with people, the shooting doesn't always start. So maybe there's something in that, right? I'd rather be doing business with somebody.
Oh yeah.
Let's talk about Tyson. So $13 billion worth of sales last quarter with a loss of 28 cents a share, disappointing the market, who were expecting $13.6 billion at 80 cents a share. It's a big swing from their $2.34 per share from last quarter. Now, I was looking at analysis. You popped this into my email that we're going to talk about it. The analysts basically say the price of their inputs has gone up, and they haven't been able to raise their prices outwards. And that's chicken, beef, and pork. Yeah. What do you make of all this? It's not like those things aren't expensive today. I thought it was all going to be about avian flu, but they didn't seem to come up in some of the analysis. What's your estimate of?
I think it's part of it, but I don't know. Last time I checked, a lot of people were accusing Tyson of being part of an oligopoly.
Right.
Oligopolies don't tend to lose money.
Yeah.
That's why I thought that headline was a bit ironic, because you can actually lose money. Maple Leaf Foods lost money, and last quarter, I think
is this the farmers actually making some money finally from these guys? Like, because we know, I don't know. I get the sense over the years that the food processors have been taking a lot of the profits out of the business, and that doesn't always translate down into the folks who actually make the product, the farmers who raise the product.
I think it boils down to investments, and as I said to the group in Ottawa, Crop Life, I actually do believe that farmers are all over AI. They've been all over AI for many years, but processing has been reluctant to innovate and invest and capitalize their infrastructure. I think it boils down to how processing will adapt. And I think Tyson will need to think about, Maple Leaf actually lost money because of its plant-based initiative. But their plant in Hamilton and the one that is, I believe, is going into operation in London for chicken. Those plants are high-tech facilities. It's great. And I think Tyson needs to do the same thing. But those companies are hard to understand. I mean, Tyson is more accessible because it's a publicly traded company. A company like Cargill, for example, like, who knows what's going on there? I mean, it's just so hard. But I actually think that right now, it's a bit of a wake-up call for a company like Tyson. It needs to reinvest. It needs to become more efficient, because margins are going to be even more important, and the cost to produce is going to become even more important.
Interesting. Well, I guess since some of these processors tried child labor and that didn't work out, I guess they got to invest in some technology. I guess that's my. I guess that's my assessment of that.
I know it's just not great. No.
Let's talk about the federal government's grocery rebate, the so-called grocery rebate, which will be hitting Canadians' bank accounts or mailboxes.
July 5th.
Yeah, what do you think of this initiative? I mean, it's putting money where money. I mean, you and I have talked about things like food programs and food stamps. This is a bit of a branding of another rebate. What do you think of the overall initiative? Do you think it's not guaranteed, of course, to go back into the grocery carts, but with a record 270,000 Torontonians standing in line for food banks, I think it can help.
Sort of. I mean, you're basically bribing your electorate with their own money. Essentially, I've always believed that there are other ways to deal with food insecurity, like the guaranteed minimum income. To me, would be an initiative that would be worthwhile pursuing. But obviously,
Ontario provincial, the Ford government canceled a program mid-flight,
which I thought was a mistake. Yeah, absolutely.
Well, it was just cruel and a mistake. Let's add that.
Exactly, and absolutely agree with you on that one. But I did say on this podcast, I think a few weeks ago, that perhaps it's time for Canada to think about launching a food stamp-esque sort of program, making sure that people not only buy food with the money given by the government, but also you could even encourage people to buy local food products and things like that. So I think there's probably something, but you need to rely on a very influential ministry in Ottawa to do something like this. And Ag Canada is not a priority. I don't feel that it's a priority. I don't feel that the ministry or that department is influential in Ottawa as much as it is, say, in Quebec, where I would probably position André Lamontagne's ministry as a top 5 ministry. Not in Ottawa. In Ottawa, it's not even close, unfortunately.
I mean, I wonder. It can easily be a provincial initiative because it is a multifaceted, multi-department. You know, in federal, it'd be Treasury and Ag and a bunch of other people doing it. And it's a political decision as well as a financial decision. So I don't know. Maybe Quebec should be the model. They're the model of a lot of things. I was very impressed by the minister and our conversation. So
no, I was actually, absolutely.
All right, now let's listen into our interview live from Seattle with Vince Sgabellone from Circana. Going to lend a little bit of insight into the food service business.
All right, joining us live at Seattle is Vince Sgabellone from Circana, the food service expert at Seattle. Is that correct?
That's correct, Sylvain. I'm the food service expert here today.
You're the expert.
Which is a big calling because there's a lot of food service experts here. So you're the expert. You're the Uber expert.
That's
I'm
right.
the Uber expert. It's on my business card today. Yes.
So tell us about your role at Circana and how did you become the food expert at Seattle? I mean, let's be honest here. This is more about retail, and the focus is not necessarily naturally towards service. We have the RC show for that, but and you were at the RC show. You're always there every year, and you do actually give talks there. So how do you see Seattle? How do you see your role at Seattle?
Excellent. Well, thanks for that. I'll take a step back first and introduce myself as you suggested. So I've been in the food service industry and the food industry for about 30 years now. Worked in distribution and sales and marketing, product development, a little bit of everything. And then about 15 years ago, I transitioned into research, understanding consumer behavior. What are they buying? How are they spending their money, specifically on the food service side. And that was a great opportunity to bring together my 15 years prior experience at that time. And now I've been doing that for about another 15 years. So I spend my day just analyzing the numbers, analyzing the data, and understanding what's going on in food service. What are the trends? What are the different age and demographic cohorts doing? What are the different operators and manufacturers doing? And what are the trends that are shaping this food service industry that I've worked in now for 30 years, which is a long time. Anyway.
But seriously, I've seen you talk several times, and what I really enjoy when I listen to you is that you do bring a wealth of data and knowledge to the table so people can understand and appreciate what lies ahead. Absolutely.
Well, thank you for that. Yes, and that's a great bridge into what we do at Circana. So Circana, if you haven't heard of it, it's the new brand that we've come up with, and it brings together 90 years of consumer purchase behavior research with the merger of IRI, Information Resources Inc., and the NPD Group, which was where I used to work. So we came together as one company about 2 years ago, and we have the most complete view of the Canadian consumer in terms of their retail spending. And so just this morning I gave another presentation with my colleague from the retail side of the business, and we were speaking about how all the trends going on in retail consumer spending are influencing what's going on in food service and vice versa, because ultimately we have just one budget, we have just one pocket of money to spend, and it's got to go somewhere, either to retail or to food service.
And remind us who she was on retail, the retail side?
So our retail industry advisor is Tamara Zames.
Tamara Zames, that's right.
Yes, exactly. Yeah. So we gave this great presentation this morning, and it's interesting how many of the trends match to how we're spending in retail in terms of hard goods and how we're spending in food service in terms of those food service experiences that we're going after.
Mm-hmm. So 30 years of experience. We just went through some very unusual times in the COVID era. So I'm not going to dwell, it's not a history lesson here. I don't want to dwell on the COVID era, but stepping back, what lessons do you think the industry learned, the food service industry learned from the COVID era? And then my follow-up question to get to it is what did you wish they learned? I mean, Savannah and I have talked on the podcast. Isn't this, the upside was a full stop to an entire industry? Is this a time to reassess and do things differently? So let's start with the beginning. So what do you think the kind of industry walked away from that experience learning?
Well, I think, you just said, Sylvain made the point that this is the time to reassess. I don't think the industry had a choice. It was basically shut down overnight. They had to reassess and figure out. And I think the one thing I learned was how resilient this industry is. There's been, food recalls and food trends like people turning away from fats or turning away from meat. And of course, economic downturns, which really do always impact the industry.
Sure.
But then the industry shuts down overnight, and all of a sudden, the industry had to reinvent itself. And I was amazed at how quickly and how effectively the industry did do that. The big thing they learned from a purely operational standpoint is they learned how to serve food off premises. If you're a full service operator and you were never doing delivery and takeout or carryout before, all of a sudden you thought, well, I can't serve customers in my restaurant. I've got to figure that out. And they did. They figured it out quite exceptionally well. They figured out how to get on the delivery apps. They figured out how to communicate with their clients where they are. And those clients were now at home because we were all stuck at home for 2 years. For over 400 days, restaurants could not serve their customers in their restaurants. So they figured out how to reach those customers where they were, and that was at home. So whether it's through delivery or for takeout, which brings up digital. So the industry learned how to get on board with digital. Prior to the pandemic,
they're kind of dragged into it, kicking and screaming in some cases, right?
That's a great way. You know what? There's a lot of reticency in this industry. We've always done it that way, and we've done very well. Thank you very much. And digital is something that this industry wasn't jumping on. So tomorrow we'll tell you that food service, in terms of digital engagement, is at the lowest end of the 15 industries we track here in Canada. We still are at the low end, but digital engagement has quadrupled over the last 3 years, kind of quadrupled overnight and stayed there for the last 3 years.
So it didn't die down, or it didn't actually improve, it just stabilized over the last 3 years?
It's kind of stabilizing now. It's softened a little bit because people are returning to restaurants now, so they don't have to order on their apps as much.
But the waterline kind of shifted
absolutely.
up, right? Would you say?
Oh, it absolutely did. It went from about 3% of ordering to about 12% of ordering now done on our mobile devices.
Right.
And it's sticking around pretty steadily at that 12%, and our future of forecasting is telling us that we're expecting this to ramp up again once people get this return to restaurant experience, this pent-up demand gets out of their system, and we're going to find this new normal. So the big thing we talk about now is transformations. The industry has transformed itself in so many ways. So the digital, the off-premises, and now what everybody's talking about is, of course, Gen Z.
Well, let's talk about the math behind digital, right? I mean, the argument that DoorDash or an Uber would say is that we're giving you customers you wouldn't have had. They're incremental business. The rest, they take a big bite of the apple, though, right? I mean, I throw a number out, plus or minus 30% of that order. Does the math still work for restaurants?
It can. Can be difficult math for a restaurant that is not accustomed to it. And the challenge during COVID is that that's all they had. When that incremental business really only applies when your restaurant is full. And then, you're happy to get the incremental low margin business that's going out to the delivery drivers, and that's fine. And now that the restaurants are starting to fill up again, and a lot of the restaurants are full again, they're now having, they get this off-premises business through the DoorDashes and whatnot, and they're happy to have it because it is incremental again. But you're right, there is a whole different operational and cost side model that the restaurants have had to adapt to, be it higher food costs, higher labor costs, higher input costs like the cost of delivery and the cost of off-premises, the cost of packaging. So they've had to really rationalize. They have new menus, they've got lower their overhead in other ways, automation, figuring out how to sell their food at the end of the day using Too Good To Go, I believe is the organization.
Too Good To Go.
And operations like that. So things to really streamline their business to make up for the fact that there are higher costs in so many different areas in the restaurant business right now.
Last question, then I'll pass the mic back to Sylvain for kind of your future assessment. But let's talk about people. So in many industries, they're struggling to find people. I think the food service industry lost a lot of their people to the cannabis industry, actually. Which opened thousands of stores and pulled a lot of people out of food service, right? Let's face it. So have they changed their attitude? We've had guests on the show who've talked about things like hospitality included, fair treatment of the workers, stagiating. Has there been structural changes or at least a structural look at the way they run their business that is more sustainable?
Yes, I think that has had to change because, as you said, people had the option, they had no choice. If you worked in the food service industry over the last 3 years, many people had to go find another job somewhere else, and they did. Be it cannabis, be it construction, be it healthcare, or just other retail areas. And so the industry has had to adapt. So one of the things they're doing is automation. Again, I can bring in some digital, which helps to streamline operations in the back of the house, behind the scenes where the consumer doesn't notice. And then you've also got the industry, the food industry, stepping up with more pre-made items and items prepared in advance. So kitchens these days can be almost assembly rooms, as opposed to, you don't necessarily have to have a chef on the line anymore or somebody who really knows how to cook. They just have to know how to reassemble things. And that's not for every restaurant, of course,
Right.
but there's more of that. So more of the automation and using the technology and the equipment to make things more streamlined. I remember speaking with an equipment manufacturer a while ago at a conference, and we were 500 people at the conference and chatting with him. And he said, this facility here uses my equipment, and these 500 meals could have been prepared by 2 people, thanks to the technology of the equipment that we bring here.
For 500.
For 500 people. 2 people on one 8-hour shift can create 500 meals. Whereas just a few years earlier, without the technology, it would have taken them 8, 10, 12 people to prepare those meals.
And would have feared the technology, or it wouldn't have been celebrated.
Well, exactly. People saying, "Oh my goodness, technology is taking
We're losing
the work
jobs.
away. We're losing jobs." We've got 100,000 open jobs in food service. We need the technology to fill those jobs because people don't necessarily want them anymore, and that frees up the labor budget to put people out on the floor in front of the customers, engaging and creating that experience, rather than hidden behind the scenes doing the work that a lot of people just don't want to do.
So let's look at the future here. You spoke earlier about the younger generations, the Zeds particularly. What do you expect out of that generation? Looking at food service in particular, do you think that the industry is adapting efficiently, or what are the main challenges that you see with what's happening right now, looking at the next generation?
The next generation is completely different than any generation before them, and of course every generation will probably tell you that they are different than everybody else. But this is more than any, it's the digital generation, so they love to engage digitally with their friends, with their brands, with the world around them. So it's all about the digital engagement, be it through social media, through the apps, through loyalty programs, whatever the case may be. And so it's up to the retailers, the operators in food service, to figure out, like I said earlier, you got to find your customers where they are, and these customers are on social. That's where they are, and so that's how to find them and where to find them. And then they look different than everybody else. The younger generation is much more ethnically diverse than the generations that came before. And that influences what they buy, how they interact. So that's why we're seeing a lot of growth in the smaller chains and independents, because these are the chains that are bringing these global flavors to the market. The Indian cuisine, the Thai cuisine, the African cuisines. And these are the flavors that the young people, more so than the generations before them, are really glomming onto, are really capturing, because they love the food exploration. They love that it brings the flavors that they might have grown up with or that their heritage brings to the table. So they love those flavors. And the big brands just can't be that creative and that innovative. Here we are at a food innovation show, and you look around the floor here, and I know a lot of my food service clients are here because they're wondering, what is that next big global flavor trend that I can bring to my restaurant, whether I've got 10 stores or 1,000 stores.
So Vince lays down the gauntlet. Big food can't innovate, is what I just heard.
Yeah.
Innovate quickly.
Okay.
Get to it. But here's the thing. I walked around this morning on the floor here and met a lot of companies that they've been dedicated traditionally to retail, but they are looking at service more and more to grow their business. And whether it's in cheese, meat, I mean, you seem to see more companies interested in doing business with food service. Are you surprised when I say that?
I'm not surprised. Now, I built my career in food service, so I think everybody needs to be in food service. There's a lot of love and passion in this industry.
Yeah.
It doesn't surprise me, though. So one of the charts I presented this morning, along with my colleague Tamar, was that about 70% of the Canadian consumer budget, a food budget, goes to grocery retail, and the rest goes to food service. So it's a big piece of everybody's spending budget, and it's also the largest portion of our Canadian consumer discretionary spending. There's about $130 billion every year that Canadian consumers spend in retail outside of cars and grocery, and about $70 billion of that is food service. And so we all spend, as Canadians, a lot of money in restaurants. So I can absolutely see why these people want to be there. There's just a vibe and an experience to going to a restaurant, and they want to be part of that.
Last question for you. I saw some numbers from Restaurant Canada forecasting the rest of the year, and they weren't necessarily positive. They seem to be on a downtrend from an index perspective. Is that consumers who are cutting back because the cost of food, or they're traveling more? But, it's a bit of a paradox, right? We expected a lot of people to buy stuff during COVID, which they did. Things, they're kind of tired. Now they move to experiences. What's your forecast, putting your forecast hat on for the rest of 2023 and into 24 for the restaurant and the food service business in Canada?
I would agree wholeheartedly with what Restaurants Canada is saying, and our forecasting models are saying the same. We're not expecting a downturn, we're expecting a slowdown in the recovery. In fact, the way I say it, the recovery's done. We're into that kind of normalized, using air quotes here, 2%, 3%, 4% growth every year is probably what we can expect in terms of number of visits, and that's kind of where the population growth is. One of those transformations that has taken place over the last 3 years in the restaurant industry is that these, again, with air quotes, these functional visits, I got to go out and get something to eat because I'm out of the house doing something else, and I'm hungry or I'm thirsty. Think about on your way to work or while you're at work.
The grab and goes.
The grab and go. Thank you, Sylvain. That's exactly it. Well, these have faded over the last 4 years because we just don't leave the house as much as we used to. And so now we have to have a reason to leave, and that's where the experience that you just mentioned, Michael, comes in. Those experiential restaurant visits, or I call them the emotional restaurant visits. I'm going out for the love of the food. I want to treat myself. I want to try something new and different and exciting. And that's what the restaurants and that's what the restaurant industry of the future can focus on to grow. It's capturing those consumer visits to restaurants because of the food, because they're excited to go out, they're excited to be there. They're not going simply because I'm hungry and I got to grab something. They want a true experience, and that's where we see the future growth coming. And this also comes back to the Gen Zs, who are much more about that than the earlier generations before them. So it all comes full circle. And it's what we're seeing in retail as well, not just in food service.
Well, Vince, thanks so much for joining us here in the Seattle podcasting studio on the trade show floor. Wonderful to meet you in person finally, and thanks so much for sharing your insights. If people want to get in touch, are you a LinkedIn person, or what's the best way to get in touch with you and the firm?
I am on LinkedIn, and as is Circana, so look us up. Happy to engage with you.
Vince is very much on LinkedIn. Oh, yeah. He's very active.
There you go. And I will see you both there. So thank you very much, Michael and Sylvain, for having me here today.
Take care, Vince.
All right, so last couple of things. New cook in the kitchen at Restaurants Canada, Kelly Higginson, takes on the role of president and CEO after serving the organization as chief operating officer since last year. I think you would join me in wishing her much success and perhaps a longer tenure than the last two CEOs of Restaurant Canada.
My goodness. I mean, the sector has been hard hit by the pandemic, and it's trying
Price
to come
increases,
out.
Everything.
You can feel that the association was equally impacted by COVID. So so I do wish her all the best, and hopefully we'll have her on our program soon.
Yeah, we've invited her, but of course, a lot to get her arms around, and we could promote our big idea, right? Our big idea is, years ago, the government rolled back entertainment dining to 50% write-off, up it to 100%. Get corporations out eating again. Like, I don't know, that seems like a no-brainer to me. Maybe we can get her on and explain what and all the different things that they can talk to the government about.
Exactly.
It's a big full plate, so to speak. Let's talk about Victoria Day weekend special.
Yes, barbecue season. Barbecue season. You should start your last request barbecue song.
That's right. I should kick that up.
So, Mr. Barbecue, what are you expecting for this barbecue season? What's different this year? Because you always cook. You're always your mind is always on barbecues. You got 20,000 barbecues at home. So, what? I'd love to be your neighbor.
Yeah. Well, I do distribute the food when I make
so great
too much
in your yard, but I never get invited.
That'd be the neighbors, because you and I did a couple of episodes last time you were in town last week. I think the big general thing I continue to see in the category is growth in charcoal and wood. So, for many years,
and wood. Okay.
Yeah. So for many, many years, you had this big shift into propane or gas powered barbecues, very convenient, very easy to cook with, but kind of lacks the nuances of flavors. And you really see a renaissance over the past 5, if not longer years of cooking on charcoal, cooking in Weber kettles, putting, and there's now suppliers where you buy chunk of wood. I was cooking last week on peach wood or whatever that are professionally put together for barbecuers, right? You're not going to find kindling wood at the front of a store. And pellet grills, where that's taking wood and cooking with actual wood versus gas. There's a role for them all. But I continue to see more bespoke charcoal, right? Like charcoal from Argentina and expensive charcoal.
What are the advantages of cooking with charcoal, for example?
Well, in one way, it's just a different fuel if you treat it that way. So, I don't want to oversell it, but charcoal, the fats and the juices go down and go back up into the foods. It's a more interesting cook. I mean, if nothing else, it's a more interesting, challenging cook for those of us who look for, you fire up the propane barbecue, throw something on, and you're done. But, maybe it gets a little more flavor, particularly if you're adding in some wood on top and you're putting a nice base of wood chunks. And so that adds just more flavor, a little bit more smoke, perhaps.
What's your preference as a cook?
Well, it really does depend, but mostly I have more and more been getting into charcoal and wood cooking because I think it adds a very good smoke flavor. But I don't like everything smoked. But I like it as well because it gives a little more challenge. I gotta watch the temperature. It's a little more interesting thing to do versus, you might as well just throw the oven on for some of these great things, which is fine sometimes. But it does give kind of a little, you got to master it, which is kind of fun. Turns barbecuing fun. And I see a lot of that happening across barbecue stores, lots more seasonings and flavors. We saw a ton of them at Seattle. Matty Matheson launched his own line of barbecue seasonings and barbecue sauces. So there's lots going on in the category. As you said, Barbecue season. Well, barbecue season never ends for me, but I'm maybe a bit of an outlier from that perspective.
No, that's right.
A bit of an outlier.
Yeah. Unlike the maple leaf season.
Exactly. The golfing season has begun, as it has for the last number of decades. Well, there you go. Sorry for the Maple Leaf and the Maple Leaf fans. All right. Well, listen, great episode. Lots of things to talk about. We got more episodes coming up before we do our summer hiatus. But during our summer hiatus, reminder to the listeners, we'll be on every single week with really interesting interviews that we recorded at the Seattle Trade Show. So there won't be a week be a week without the Food Professor podcast. There'll be shorter episodes, right? They're 15-minute kind of episodes, snack size, so to speak, while we take a break and refresh and come back stronger in the fall. But anyway, this season is not over. But for now, I'm Michael LeBlanc, consumer growth consultant, keynote speaker, podcaster, and you are?
I'm the Food Professor, Sylvain Charlebois.
All right, everybody. Safe travels. Sylvain, so great to see you live in person last week, and I look forward to seeing you live on camera next week. Until then, be safe.
Take care.